I hope your 2022 is off to a great start. As usual, I'm joined by Randall Jenneke, who is Head of Australian Equities and Portfolio Manager for the T. Rowe Price Australian Equity Fund for what is our first video for the year. I'm sure many people were happy to put a line through the year last year, but for equity investors it was actually a pretty good year. How did you see the fourth quarter finish for Australian equities?
Thanks, Jono. So the fourth quarter ended quite strongly. So the market overall was up a little over 2%. And that took the total calendar year returns to a little over 17%. So pretty strong into the year. But I think there were quite a lot of changes we saw, particularly the latter part of the fourth quarter. So locally, obviously, we started to see that we relaxed restrictions in New South Wales and in Victoria. The virus started to spread, and that created a bit of dislocation, particularly for a lot of businesses. But I'd say the equity market largely looked through that. As people form the view that this is probably the last of the major disruptions from COVID. We shall see if it plays out that way.
Yep.
And that's mainly because it looks as though Omicron is more of a milder variant, so it spreads more or more easily, but in terms of severity is more mild. And so I think the market took that as being quite a positive, that hopefully we're going to have a less disrupted 2022.
Earnings season kicks off. And we've seen in the US, the last reporting season there, that even companies that might have missed their guidance slightly, the share price was quite some big swings there. What are you particularly focused on in this earnings season for Australia?
I think it's going to be a bit of a tricky reporting season that we're going to see in February. And that's mainly because we know on the one hand that there's going to be various disruptions to a lot of businesses we saw at the end of last year because of, I guess, the lingering impact of isolation for a lot of people, a lot of obviously staff that haven't been able to go to work. So I think we're going to find that a number of domestic businesses in particular are probably going to come out with some numbers that aren't going to be that strong. But I think we should look through that because we should get back to a more normal environment by the middle to the end of the year. I think the other thing that people are focused on is just what's happening on the cost side. We are seeing costs go up in terms of wages, freight costs. There's a lot more cost pressure. So the main focus for us is looking at what all this means for margins, where it's likely that I think we're going to see some more margin compression that the market's expecting. So I think it's going to be what I would term a soggy reporting season. But more importantly, it's about really what the rest of 2022 looks like. That's going to be a key focus.
Okay, so you mentioned they're more normal towards the end of the year. We've seen in January already some pretty violent swings in share markets year to date. How do you manage a portfolio through this? If we're expecting a soggy reporting season, might take some time before we see some more normalcy. Is it a case of doing a lot, really doing your homework on the stocks and trying to ride it through, or chopping and changing based off what's playing out in the markets? How do you manage a portfolio in this environment?
So the way that we think about this is that share price volatility creates opportunities for us. We spend a lot of time understanding companies, sectors, the drivers, and looking longer term. So when we get some near-term volatility, corrections, sell-offs, for us, that's actually really good news because it means that we can take advantage of that. And I would say right now what we've seen so far into 2022 is the market adjusting. And it's adjusting to the fact that we're going to have more normalised interest rate settings that are going to start to be evident over the next 2 to 3 months. So that means that interest rates are going to go up. And so the market resets whenever that happens. And that does mean that different parts of the market in the short term may well come under pressure. And I would say some of those businesses will probably be sold down for the right reasons in that they became too expensive. But there'll be other parts of the market where the market will take it too far, as the market tends to do. And for us, that's really good news because it creates opportunities. So one of the things that we've been doing during this January period, where, as you say, it has been quite volatile, is to start to pick up and add to positions in some of those names that we believe are oversold based on their longer term fundamentals. So there might be a bit of headline news around what's going on in markets, and there might be some people who are kind of worried about the correction. I actually think as a long-term investor, these are really good opportunities to reposition your portfolio and to take advantage of those share price movements.
Yeah, great. Well, thank you, Randall. And thanks for your interest. If you need any further information, please reach out to your local T. Rowe Price representative. Thanks.